Nicholas Bornolis of Capital Link, and I would like to welcome you to Capital Link's Invest in Greece webinar series. We initiated this webinar series back in June, and our first webinar was with Mr. Alex Patelis. And today we are delighted to have him back with us to provide us with an update on Greece's economic policies and objectives and strategy following the very important announcements that were made by the Prime Minister during the Thessaloniki International Fair. We are privileged to have Mr. Patelis with us. He's the Chief Economic Advisor to the Prime Minister, and he will be discussing the latest announcements and their impact on the economy, the growth, and the society at large. With Mr. Dimitris Koutsopoulos, who is the CEO of Deloitte, I'd like to welcome you both and thank you. And with this, I will turn the floor over to the two of you.
Thank you very much, Nicholas. It's a real pleasure to be here with you today. It's an honor for me to introduce our speaker, Mr. Alex Patelis. For all of us in business who seek to find just the most insightful tip, the expert, the source of information, Alex embodies all these attributes. And I'm personally very interested to know his analysis over what Kyriakos Mitsotakis announced at this year's International Thessaloniki Fair. The Prime Minister unveiled a comprehensive package of 45 measures aimed at modernizing various sectors of the economy. And these announcements seem to reflect a commitment to stability and growth, addressing both short-term challenges and long-term transformations. I suppose we all agree that in any reform package, it's essential that we understand how different segments of society will be impacted, from businesses and investors to average citizens, ensuring that each stakeholder sees value in these measures is crucial for the success. So welcome, Alex. And with this brief introduction, I will now proceed with some questions to you. During his visit at this year's Thessaloniki International Fair, the Prime Minister presented a package of 45 measures and reforms while outlining a roadmap to the future. Could you please describe the basic pillars of the TIF package and their end goals?
Thank you very much. Good afternoon, good morning, and good evening to everybody. I hope you can hear me well. First of all, as always, lots of thanks to Nicholas and Olga Bornosi and Capital Link for extraordinary organization and the opportunity to address you today, and also to Mr. Koutsopoulos for coordinating the conversation. So the Prime Minister addressed the Thessaloniki International Fair. For those who don't know, that is traditionally the kickoff of the economic calendar for the year in Greece, and typically is used as a platform to outline the main priorities. So this is a government in its second year of a four-year term, following after the completion of the first four-year term. So this is effectively the sixth year in government, and you will find a lot of the themes continuing from previous, from before, but also some new ideas coming forward. I would say what's different this time around is, of course, the new fiscal framework that the European Union now has, and the budget that will be submitted to Parliament will be the first under this framework. But the main themes continue. We still favor a lower tax burden. We still favor reforming the economy. There was a lot announced in housing, in terms of tourism, in terms of demography, in terms of development, technology. And as Mr. Koutsopoulos mentioned, there was a total of 45 new measures, but I would say the overriding theme is the government steps over each problem and tries to address it in a very detailed manner.
Thank you very much, Alex. I would very much appreciate if you can give us a quick mapping of the benefits for every key audience stakeholder.
Yeah, so we had I would say the key announcement was a further reduction in Social Security contributions by 1 percentage point. You will recall that in total, the government has now reduced Social Security contributions by 5.4 points since 2019. This is purposeful. The idea has always been to reduce taxation on salaried labor and also on capital. This encourages not only new investment, but also helps people's disposable income, given the cost of living crisis that everybody faces. And of course, this 1 percentage point reduction cuts across both private and public employees, public sector employees. We also have, for the public sector itself, an increase in nominal wage of civil servants. We had one in 2024. There will be another one in 25, 26, 27. I want to remind the audience that government employees have not had a pay increase basically since before the crisis, since 2009. And of course, a lot of pretty much everybody saw their wages cut during the crisis. So this is an important move, particularly in the context of a 15 percentage point or so increase in the average price level. We then have also for sole traders or self-employed people, as you know, there was a new way in which self-employed people pay taxes. Under the new regime, a minimum income of the minimum wage is assumed, and so no one can declare less than 830 euro a month if they're self-employed. This, of course, was a big shift and did create additional revenue this year. So as of next year, the existing Telos Επιτιδεύματος, the surcharge that all self-employed people used to pay, this is now abolished altogether. We then have for farmers, we have a new program that's to encourage greenhouses in the farming sector. The Greek agriculture remains in need of significant investment to increase productivity, and greenhouses is one such step. Of course, pensioners receive the usual increase, which is half of real GDP and half of inflation. The increase is the average of the growth rate in real GDP and inflation. And so altogether, we see increases in disposable income for a number of categories. And of course, this is important to face the cost of living crisis.
If we focus a little bit on enterprises, technology, and business, could you please single out the measures that are targeted to foster a friendlier business and investment environment? And how will enterprise investing and innovation benefit from the government's initiatives?
So the Prime Minister also announced a big initiative to reduce red tape in 15 processes that business people face when dealing with the state. And this is going to follow an OECD recommendation to break down those processes into their steps and try to eliminate excess bureaucracy and the stuff that's simply not needed. We also, the Ministry of Finance also has a bill in Parliament to encourage research, innovation, and technology. This has a number of articles and a number of tax benefits for angel investors, for accelerated depreciation, to encourage more mergers of companies, and there are some accounting changes. I would say for this audience, one interesting change is that the Golden Visa program is now being offered for those who invest in startups. So if you invest 250,000 euro or more in a Greek startup or technology company, you will be granted a golden visa. The audience might recall that the cutoff point for real estate investment in golden visa has been increased to 800,000 euro, and this is purposeful. So we are, what we are saying is let's shift the focus of golden visa away from real estate and towards startups or towards tech investments, which will benefit everybody, including those, of course, who choose to relocate to Greece.
If you go to another thematic area, that of housing, how do the measures announced tackle the very important issue of housing, and how does the housing issue correlate with the country's demographic problem?
So housing is, as you can imagine, housing is an issue that's at the top of the mind of pretty much all countries in the world. Greece is no exception. We did go through a crisis, and so house prices declined. But since then, house prices have increased again. They're up about 68% since the 2017 low. Now, the situation in Greece is as follows. 70% of households or so are homeowners, and have benefited from this increase in real estate prices. But for the 30% that are renting, the rental costs are a significant share of their disposable income, on average, at least 40%. So this is a big issue, unsurprisingly. Now, what you also see in Greece, different to other countries, is we do have a declining population. However, household formation continues to increase, and the number of households today is higher than it was the case 10 years ago. And so demand for housing continues to increase. What is peculiar about Greece is that we still have a large number of vacant properties. In fact, the Statistical Authority recently published the results of the 2021 census, and they found that in the whole country, there are 790,000 vacant properties. Now, vacant properties are not holiday homes, they're not second homes, they're vacant homes. Vacant homes, they might be vacant for many reasons, one of them being that renovation costs are significant compared to the rental yield. So what the government has done is we've created a program to subsidize renovations of vacant homes if you promise to rent it out. We've also given a tax incentive. If you have a vacant home and you rent it out, you will not pay tax on your rental income for 3 years. Same thing if you have an Airbnb or a short-term lease and you convert it to a long-term lease, you won't pay tax on your income for 3 years. We also have a temporary ban on new Airbnbs in the center of Athens. And the idea here is that we want to encourage people to shift to other areas, but also to avoid converting the center of Athens into Disneyland or to over-gentrify. And of course, we have the big program called Spiti Mou, which, as you might recall, started in 2022, a subsidy of mortgage interest costs for those who are now embarking at the beginning of the housing ladder. So the next installment of Spiti Mou is about 2 billion euro. 1 billion comes from the RRF, 1 billion is from bank lending, and this will be aimed at about 20,000 or more beneficiaries who will be able to purchase their first home at an interest rate that is going to be discounted between 25 and 75%, depending on your particular circumstances. We have done some econometric analysis, and this has shown that such a program does not really affect house prices much, because it is targeted at that segment of the housing market that is depressed, as opposed to the part that is already booming. Of course, we also have a separate program to address the demographic challenges of Greece. As you know, we now have a Ministry for Social Cohesion and Family. This program to arrest the demographic decline has many, I would say, subcomponents, but broadly speaking, it tries to give incentives to companies to support families, either through tax incentives or others. It continues to roll out more nurseries and kindergartens for babies and young children, and it continues to give a greater emphasis on families with 3 or more children, and there are many measures included in that program.
Thank you for this. Next area, which of great interest, I believe, for many of us, is tourism. And given that tourism is really the locomotive of the Greek economy, what will be the impact of the announced measures for the sector? And also, how will those measures contribute to the support of local communities in the face of the issue of over-tourism that we have seen in many instances?
So everybody knows tourism is a very important part of the Greek economy. It continues to grow. The demise of tourism has been predicted many times, but it continues to defy skeptics. This year, we have yet another year of record number of tourists and record revenue. We are now firmly above the 2019 level. Tourism itself is changing. The traditional form of tourism in Greece, which would be tourists from the north of Europe, traveling to Greece in the summer for the sun and sea, that whole thing has been diversifying for many years now. We have new geographical regions, Middle East, United States, other parts of the world traveling to Greece, Central and Eastern Europe. We have other forms of tourism. We now have medical tourism, we have conference tourism, we have sports tourism, mountain tourism, religious tourism, all kinds of things that are changing the form of tourism that we see. And of course, with this growth comes let's say, individual problem areas. So, for example, cruises in Greece had a very big growth over the past few years as they were liberalized and effectively allowed. And we have certain parts that are now facing too many cruises. So what we're doing is we are creating a system to manage the cruises, particularly in popular islands like Mykonos, Santorini. This will take some time to be put in place, but it will be a proper cruise management system. And of course, in addition, we are introducing a per passenger fee that is up to 20 euro per passenger for Mykonos and Santorini in the peak season. And it declines for other islands, but also it declines for other parts of the year to encourage people to spread out throughout the year. We have also increased the so-called climate resilience tax that we have, or the levy that we have on tourist bookings. This is also, all this revenue is used to support tourist infrastructure, transportation infrastructure, and make sure that tourism continues to be sustainable. And of course, we have what I mentioned before on Airbnb. We looked into banning Airbnb altogether or limiting the number of days that a property can be rented, but we found that this has not been very successful elsewhere, and that the opportunities for all these properties to move to the black market is real. And ultimately, we do want tourism to continue to grow. This is a very important industry for Greece. And but it needs to happen in a way in which the product itself is not undermined. So we feel that these are steps not so much to control tourism, but to make sure that it continues to grow in the right way.
Thank you.
I should also mention, sorry, I forgot that we're extending rather obligatory insurance against natural disasters. So this was introduced recently, and we now extending it it started with very large companies. We now have obligatory insurance against against natural catastrophes for large and medium-sized companies. We're also extending it to large households, large residential properties with a significant tax incentive, obligatory insurance of cars as well, automobiles. And of course, this is because we're all moving towards a period where climate change is real, and we need to protect the budget against unforeseen natural disasters.
Thank you. We have a new fiscal framework, and the Prime Minister asserted that the measures announced will be implemented without the risk of fiscal diversion. And in this context, can you please shed some light regarding the priorities and key consideration of the new fiscal framework?
Of course. So the new fiscal framework is a little bit more complicated. Before, it used to be very simple. You were given a particular numerical target for your primary surplus. So those who follow Greece will recall the 1.5% target or the 2% target for primary surpluses. This is now history, and now we have shifted to effectively cyclically adjusted targets, but this time on expenditure. They call it the net expenditure benchmark. What that means is that each country, each member state has a limit to the growth rate of expenditure of government spending once you exclude a number of cyclical items. So you exclude interest rate expenses, you exclude unemployment benefit, and you basically try to construct a measure of spending that's cyclically adjusted. And so for Greece, that measure will be cannot grow more than, let's say, 3.6% or so per year. Now, there are certain items that have already been budgeted. For example, we know more or less what pension expenditure how it will increase. We have some defense spending increases budgeted. And so we know more or less what the ceiling is. If we want to spend more money or to cut taxes, then we need to basically have a reciprocal shift on the other side. So, for example, when we decide to cut Social Security contributions, one way in which we can do that is we can produce savings somewhere else. And another project that is being that's in the pipeline and is being unfolded is reform of the benefit system in Greece. Now, by benefits, we mean all kinds of benefits under the welfare state. There's a big project that undertaken by the Ministry for Social Cohesion and Family to streamline the benefits that it gives out, the minimum guaranteed income, the housing benefit, the child benefit, etc. And what we're doing is we're following OECD recommendations. We are introducing common income and wealth criteria so that they are the same, across all benefits. We are also strengthening the net so that there are tight income and wealth criteria so that only those that really need the benefits receive them. This creates fiscal room to increase some of those benefits, and which had to happen anyway given inflation. And importantly, we're trying to address so-called welfare traps. So we're introducing an income disregard for some of the benefits, which means part of your salaried income will not count against your income ceiling to receive the benefit, and this is to give incentives to people to either remain in the labor market or to take a new job. We're introducing incentives also for students who can continue work, who can choose to work even and without their parents losing their benefit, etc., etc. In terms of the unemployment benefit, the Ministry for Labor is in the process of conducting a reform of that benefit. It's not yet ready to present the full result, but again, the idea is that the eligibility is tightened. It's more closely related to the size of the unemployment benefit is related both to the length of employment, the type of employment, and there is an incentive given to rejoin the labor market as the unemployment benefit starts at the beginning being very generous and slowly over time is reduced. And there's also a need to address a seasonal unemployment benefit because growth in tourism means that this is now a sizable budget item. And of course, it makes little sense to just subsidize people to work in the summer, particularly as we want to elongate the tourist season. So we have to look into that. But I would say in response to Mr. Koutsopoulos' question that the new fiscal framework is quite complicated because every government needs to balance the budget across a cycle. It's quite difficult to explain to someone what exactly is allowed and what isn't. But we do have a lot of experience with dealing with frameworks, and we do have, I believe, very good dialogue with the Commission, and we understand what's needed. And ultimately, we do believe that we are able to create fiscal room whenever we need that. At the same time, our main objective remains reducing debt. Debt continues to be on a firmly declining path and sustaining significant primary surpluses.
Thank you very much. Thank you. Thank you for all the analysis, for all the measures that have been announced. If we take it at a higher level and we go at the European level, what we very recently had was the release of the Dragi report. I would very much appreciate having your view on the report that was issued.
So the Draghi report was a long-awaited report. As you might recall, it had been rumored to be released, early in the summer. In the end, it was delayed, and probably rightly so. For those who have read the report, and I would urge you to read it, it's a very detailed report. It doesn't read as a report that one person wrote, but a team of experts. And yes, the headlines that the Financial Times and other newspapers focused on were basically about Draghi's call for 800 billion of fiscal borrowing, which Germany's FTP quickly shot down. But this would be, I think it would be unfair towards the complexity of the report to try to simplify it just onto that headline. In reality, the timing of the report was very interesting. It came out just as the president of the commission was about to introduce the new commissioners. And indeed, today, a few hours ago, for those who don't know it, President von der Leyen introduced her commissioner nominees from each member state, the portfolios they will each be receiving. And for Greece, it's transport and tourism. And of course, the so-called mission letters. The mission letters are the letters that the president of the commission sends to each candidate commissioner, and they invite them to assume a particular portfolio and invite them to address specific targets and issues. And if you glance through the letters, the mission letters, you will find a lot of items that are similar to the Draghi report. So I suspect the Draghi report will be used as a compendium, as a library, as a resource for future commissioners to draw onto for very particular and specific ideas in the area of competence. And in that sense, I think it'll serve as a blueprint for the new commission.
Mr. Patelis, Alex, I would like to thank you very much for your insightful analysis, for all the responses you have given us. I believe that everybody has got a very clear view of the new measures that have been announced, as well as your view on the Draghi report. And I will turn the floor to Nicholas. Thanks once more.
Thank you very much.
Well, my task is very easy because all I have to do is thank you very much, Dimitris, for the expert moderation, and of course, to thank Mr. Patelis for another amazingly insightful, detailed, and clear insight. So thank you to both of you. Thank you, Alex. Thank you, Dimitris. And I'd like to remind everybody that our 26th annual Capital Link Invest in Greece forum will take place in New York on December 9, and I hope that all of you will join us in person in New York at that time. So thank you very much
for everything. Take care. Bye-bye.
Bye.